Guys, you are welcome to our channel. In the previous videos, we looked at expenses owing and expenses accrued. And you want to look at the other aspects, which is income owings or income accrued and then income prepaid. So when you say income owings, what is the meaning? We are saying the amount of income that a business has earned but not yet received. So in this case, the entity has earned the income, but the payment thereof has not been received. So let's give an example. Let's say a business has a building that it is not occupying, and for that matter, it has decided to let this building out to people to come and rent. So in this case, the business becomes the landlord, and then those that are coming to rent become the tenants. So let's take, for instance, the entity has given the building out. It has been occupied by a tenant for about 2 or 3 months, but the tenants have not made payments for that period of time. In that case, it becomes rent receivable owings. Over here, the business is not the tenant, it's now the landlord, right? So the business expects to receive that rent from the tenants. That is why it's what rent receivable. Okay, here the business is giving the asset out for someone to rent. So the rent receivable owing means that you have given let's say the asset or the burden out to people, they're occupying it, but they have not made the payments for the period that they have occupied the burden. And so it becomes rent receivable owing. We have another example, which is subscription owing. Subscription is basically from the point of view of non-trading organization. Let's say club, society, church, entities that are not into trading, right? So one example is club and society, church, school, and all of that. So for non-trading organization, members make regular contribution because they are not into business. They are not there to make profits, and so the only way they finance their activity is through contribution from members. So members make regular contribution towards the organization, and that regular contribution is the subscription, right? So let's take, for instance, in the organization, every member is supposed to make a payment of $100 every month. So if in, let's say, a whole month or 2 months or three, members have not made their contribution to the organization, then it becomes subscription owings because the members are now owing the organization that amount. The members are owing the organization that amount. So the subscription owing, and then rent receivable owing, or any other income owing, we say they are what? Assets. They are not liabilities. They are assets. This is direct opposite of the one we looked at, which is expenses owings. Expenses owings are liabilities, but for income owings, they are not liabilities, but what? Assets. They are assets because this transaction is resulting in what? Future cash inflow. Okay, it is not the obligation of the entity to pay in the future, but it is an obligation for someone to pay the entity in the future. So the entity has a right to receive that money. Okay, it doesn't have any obligation to make payments, so it cannot be a liability. So don't confuse this with that of the expenses. For the expenses only, the entity has the obligation to make the payment in the future. But for income ownings, the entity has the right to receive the money from the people in the future. And so it becomes an asset to the entity because it has a right to receive something. And this is resulting in future cash inflow, which is an asset. So it is direct opposite of the expenses owing. And in that video, we also understood why it is a liability. Now, income prepaid. We are saying they are income received in advance of earning the income. So over here, the income has not been earned, but you have received the income. So a good example is the rent. So rent receivable prepaid. So let's take for instance the burden that you have given it out to your tenants. Some of the tenants have paid their rent for the next 2 years, or they've made advance payments for a whole year, or let's say a whole 2 or 3 years. In this case, you have received the money in advance, but the rent has not been earned, right? Because you earn it when you perform your side of the obligation. The person is occupying it today, but he has made payment for tomorrow. He has not occupied it tomorrow. And so that money has not been earned. You have not earned it because you are not even sure if the burden will be available tomorrow, right? So let's say someone who has made payment for 2 years. You can't say you have earned that income for that 2 years because, as I said, you don't know whether the burden will be available in the next 2 years. Maybe the burden can collapse. The burden can develop serious faults that will not be possible for people to occupy. In that case, you have the rights, or you have the obligation, rather you have the obligation to give your tenant their money, because your burden is no more it's no more possible for the people to occupy. And in that case, you have to give them their money. And so you have not earned the income, yet the money has been given to you. The subscription also, your members are supposed to make payment every month. But somebody can come today and say that, oh, I'm making payment for the next 6 months. We usually do in our organizations, let's say in church, most of the organization that we found ourselves in, we can make payment for the next 6 months. Some people can make their payments for the whole year. So right at the beginning of the year, January, then they make their payment for the whole year, right? So that becomes subscription prepaid. And subscription prepaid is a liability. Okay, subscription prepaid is what? A liability, not an asset. It's a liability, not an asset. It's a liability because over here you have received the money, right? But you have not performed your side of the contract. And so you have the obligation to perform your side of the contract in the future. If you are not able to perform it, you have the obligation to give the money back. So the example I gave for the building, someone has paid for the rent for the next 3 years. And as I said, you are not sure whether the building will be available the next 3 years. So let's say after the end of this year, there was some earthquake, the building collapsed. Now, the tenants can come for their money because the building is no more there for them to occupy, but they have made their payment to you for the next 3 years. And so we now have the obligation to give their money to them. And so it's a liability for you, even though you have received the money today, but it's a liability for you because you have the obligation to either make the building accessible to them in the future or to give their money to them, because you may also even have some kind of repairs work to be done on the building and all that. So when income is prepaid, it's a liability, which is also direct opposite of expenses prepaid, which in our previous video we came to understand that it is what, an asset. So that is the income owings and then income prepaid. You need this classification as being asset or liability so that you can really prepare a complete income account to know the amount that to be taken to the income statements, which is the trading profit or loss account. So this is it. So if you have not subscribed to our channel, we entreat you to subscribe. In our next video, we are going to look at how to prepare the accounts when you have income owing, income prepaid. You have all of them together. How do you put them together to know the amount that to be taken to the income statement, which is the trading profit or loss account. So thank you for watching, and thank you for subscribing to our channel.